Well, good morning, good afternoon, or good evening. This is Anthony Navarro with Sabre Trading Systems, and we're here to talk about a wonderful subject that we all like to think about in the market is market manipulation, because we trust all those people on Wall Street with our money, don't we?
Oh, yeah. Absolutely.
I've seen this video a while back, and basically I've never really done a running commentary. I've never seen anybody really do a running commentary on this. And Patrick and I were in the same circles, and we both recalled this video together. So, oh, you know that video too?
Yeah.
So
yeah.
I thought, why don't we just talk about it? And what an amazing time to be a trader. And as you all know, I trade using my own proprietary system. Patrick trades and invests, in using his own philosophies. So we have the same belief that we need to put our money to work, right?
Yep, absolutely.
And because how much can we get just by working for our money?
Mm-hmm. Absolutely, got to invest. I'm excited because I get to learn what this guy has to say before I watch the video. So I'm the first one to learn. So this is be good. Here to learn as much as I am to comment. So.
Yeah, we have a belly full of food. We just got done with lunch, and so we can relax and have some fun. As a preview, we usually think that the markets are going to help us. They say get involved for the long term. The market's always going up, and we don't know really the mechanics that are going on behind that. And I'm going to show a couple screenshots from various news articles in the past, but year after year we see that it's just standard operating procedure that these institutions are really literally manipulating prices, manipulating sentiment, creating fear and doubt. What was it we said? FOMO and
FOMO.
You made up another one. It was
FOMO, YOLO, and FOPT. Fear of paying taxes.
Fear of paying taxes, yeah. It's funny when you approach people about making money in the markets, like, well, you have to pay taxes on that? I was like, well, yeah. But you saw one of my comments from one of my articles saying, one of my goals in life is 1 year to pay $1 million in taxes. Mm-hmm. Because what does that mean? It means we made money in the markets. So, year after year, here we have in 2015, 5 banks, and not little fly-by-night companies. This is Citicorp, JP Morgan, the big boys, getting fined over almost $6 billion for market manipulation, for manipulating the forex markets, the currency markets. And, you think that's going to stop them?
That's a drop in the bucket.
Drop in the bucket, a slap on the hand. Oh, we're sorry, we got caught. Yeah, we're sorry you got caught. You're not sorry for getting caught, because you're just going to do it again. 2016, Deutsche Bank getting caught manipulating the metals market, fixing prices in the metals market. 2017, Barclays getting in trouble for manipulating the power market, of all things, in California. 2018, a whole bunch of fraudsters manipulating a whole bunch of microcap stocks, and then of course 2019, Citigroup again, Barclays again got caught rigging the forex market again, didn't learn their lesson the first time. And 2019 was a hallmark year for market manipulation, that we had our first $1 trillion lawsuit. Tether, crypto company, got caught manipulating $1.4 trillion out of their customer accounts. So how do we avoid this? We trade, and we trade by following them. And it's one of those things where, it's kind of like being behind that submarine, like in those old submarine movies where you're hiding behind the propeller or the bad guy. They can't hear you. And it's almost like those sharks, they have that little sucker fish hanging on with the shark. Right. You want to swim with the sharks, but you don't want to be swimming among the sharks. And when we learn that this is just standard operating procedure, we can't stop it. We've got to find ways to prevent it. And one of the things we do is just stop watching the news, stop reading economic reports, stop believing the people that are talking to us out of this, because they're talking out of both sides of their mouth. And so that's what we're going to see today. This is a classic video that probably was never meant to see the light of day.
Yeah, that's for sure.
Yeah, and what's so funny is the poor interviewer probably didn't know what he was getting himself into. But Cramer, probably one of the most recognized names in the financial world, is basically telling, spilling the beans on how he
dirty
does
little
it.
secrets. Yeah,
dirty little secrets about how he makes his money, how he is able to manipulate these prices to do what's in the best interest for him and his hedge fund, not for all the people that are invested in his hedge fund.
So he was talking about when he was because he was a hedge fund manager, so that's what he would do.
Yeah.
Right? Yeah, that's what I thought.
Yeah, him and all his colleagues and the people still doing it to this day, because that's how they make money. And that's one of the things. If you watch the movie The Big Short, and then I just rewatched again last night, Margin Call. These guys know what they're doing, and they know what's going to happen to the people on the opposite ends of all these trades. So let's go ahead and let's just get started, and we'll go ahead and see what Cramer has to say. What's funny is my first introduction to Cramer was in the first Iron Man movie.
That's right. Yeah, no, he did a cameo.
He had a little cameo in there. And what was this show? Mad Money?
That was the first way. That right, because they were like selling Tony Stark's stock.
Yeah.
Like sell. That's right. Yeah.
He said, what good is a weapons company that's not making weapons?
Not making weapons. That's right. Oh, man, I forgot about that.
So later when I got into the trading world and the Cramer became a name to me and I saw Iron Man again, oh, that's a real guy. So,
yeah.
And it's funny when movies use real people to pretend, whatever's happening in the movie is really happening. Newscasters, celebrities, and things like that.
Yeah.
So we got some subtitles here, and we're going to be listening to what's coming out of the horse's mouth, and basically reviewing it and giving us a bit of an education that you might not get just by listening to it. Really understand what this guy is saying, and this really helps us determine where it is we should put our money, or more importantly, where we shouldn't put our money. So let's go.
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures.
So misdirection from the futures market, and what that means is, when people are buying stocks in a company or investing in a hedge fund, they're expecting it to go up. And how do they get information? They get the information from economic reports or prospectuses and things like that. But one indicator is, what do they think is going to happen in the future? Now, we can't tell the future. Wouldn't it be great to do like what Biff did in Back to the Future, go get all the sports scores and go back? Imagine if we just had 1 week of charts.
Of knowing when the highs and when the lows are going to be. 1 week.
Yeah, 1 week.
Make a lot of money.
You might be able to pull it off in a 24-hour period, but if you just had 1 week to trade, knowing what was going to happen here. And one way we can kind of prognosticate or see what's going to happen in the future is to look at the futures market. So you want to know what the big boys, because the big boys are trading in wheat, trading in cattle, trading in oil, and all this. So you look at the futures market. And so what we're going to see is, as he said, there's a little bit of misdirection going on in the futures market. So what's happening in the stocks of, say, these oil companies are not reflective of what's going on in the futures market for oil. So where's the disconnect here? What's the misdirection? And so the commentator, the host, is just picks off right out of the gun with that.
Up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down.
So he's managing a hedge fund and he's short on these positions. The way he makes money, the way anybody makes money in a short position, is only if something's going down.
Right.
So he's saying here, when I was short and I needed it to go down, if he needs it to go down, what's it implying? It's not going down. So rather than let the market do what the market's going to do, I need this to go down. He's going to do something to make the value go down. It's not the natural forces of supply and demand at work. It's these hedge fund managers you're seeing the dawn of this idea of manipulating price.
I mean, that's just the definition. He's manipulating.
Yeah. It's
not normal. He's manipulating it. So
yeah, it's one thing if I have a Beanie Baby that I bought back in the 70s or 80s, maybe 90s, and then the price is going up, I can sell it. Somehow they're creating an idea. I need this to go down. I need this to go down. How am I going to do it? So now we'll continue on.
I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
So he's going to do something to manipulate the futures market, and it doesn't take a lot of money. So it's using a little bit of money to make a lot of money, as we like to do in trading with the options and futures and Forex.
Not a lot of money to a hedge fund.
And certainly not a lot of money to a hedge fund. So he's using a little bit of money to create some activity in the futures market. So he's stimulating something. He's making something happen.
Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it.
So for a hedge fund, $5 million, drop
That's
in the bucket. You're talking
nothing.
about tens of millions, hundreds of millions, maybe $1 billion,
Yeah.
right?
Oh yeah. Easy.
So-
Easy $1 billion hedge funds out there.
So let me take like 0.00% of my money and just throw it out there and do what? Affect it, manipulate it.
Make it look a little rosy.
Yeah.
I love that.
Yeah. Or a little bad.
Yeah, or a little bad. In most cases, it seems like, right?
Yeah. Yeah, that's great. And this poor guy. Also, check the body language of the host.
Yeah.
Because he's going to be hearing things, and even the host is like, "Did he just say that?"
Yeah.
I was like, "Okay, I know that's what you said, but we probably shouldn't be saying that right now. Let's." And so
He tries to get Cramer out of it. He does, but yeah, I don't know.
Yeah.
Let's see what happens.
yeah, let's see what happens. Let's roll to the tape.
What you're seeing now is it probably is bigger market. Now, maybe you need 10 million in capital to knock this stuff down, but it's a fun game.
It's a game. Oh, it's a fun game. Let's knock this stock down.
Yeah.
I just need $10 million. Let's take other people's money and let's make it worth less.
Yeah, let's make it look like something's happening that's not happening, and scare people into selling or do whatever, or encourage people into buying, and then when it's where we want it, then we do what we really want to do. Oh man,
Yeah, and that's
frustrating.
And he calls it a fun game.
Yeah.
You're playing with my money, dude.
and he's
know?
about to say it's very rewarding.
It's very. Oh, don't jump ahead. I know we've watched this video a few times
I've
ourselves.
watched it a
I was
couple
like,
times.
got so many little talking points on here. But it's a fun game.
And it's a lucrative game, and you can move it up and then fade it. That's all often creates a very negative feel.
So you fade it. So a fade trade is going long and then selling it when you're ready to see it go short. So you fade your position. First you say you got 100 shares long on IBM, and then when it hits a level, you go 100 shares short because you expected it to hit that ceiling. And that's what he's doing. He's creating that sentiment and then creating another sentiment. Yeah. Whoop.
So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view.
So when the real sellers come in, all the people that are actually trying to make money using what? Fundamentals, using the
Right.
economy, using all the things that it's supposed to be doing. Like why does a stock, when you have great earnings reports, you think this company is awesome, they had a great fourth quarter, why does the price go down? Or if they had a terrible quarter, why does the price go up? Mm-hmm. And that's what they're doing. When the real market comes in, what did he say? We're going to knock it down. It's going to create that negative. Hey, I just bought this stuff. Now it's going down. Now we're creating, again, emotion. And emotional trading is the worst kind of trading. Scared money is bad money.
Yep, absolutely.
Never trade with scared money.
Mm-hmm.
That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal.
Right.
Just go ahead and do it. It's legal. It's not illegal.
Host says nice.
Nice. Oh, it's nice. or today it's be noise.
Yeah.
Who coined that? Who are those two guys? Keen and Peele?
Did they coin it, or was it?
I saw a skit, but I don't know that they coined it.
Another comedian. I can't remember his name though. I think
But
he did.
noise.
Noise.
Anyone can do it. It's legal. We're manipulating things, creating a false reality, moving prices around, but it's legal. It's nothing illegal about that.
Right.
Just because something's legal doesn't mean it's moral. Right? So-
Absolutely.
And we know a lot of things in society that's way. Man, so it's a nice game. I hope you all play this game. If anyone in the hedge fund, I thoroughly encourage it because it's legal. And nice.
And it is a very quick way to make money and very satisfying.
Okay.
I think that's one of the most disturbing quotes in this video is it's satisfying.
Yeah.
It satisfies my heart. I am pleased. I thought I did a good job today by what? Taking people's money in an illicit way.
It's like bullying the pot in poker and being like, I've got all this money and I'm going to make you think I've got something I don't, or whatever it may be, and it's just too rich for my blood. So you have to just fold. Like, you can take my ante, you can take what I had on the table, but I gotta go home with what I got left. It's causing people to do that, and it's very satisfying just to take their money. That's why I remember that phrase, because it's like it irritated me too. Same thing.
Yeah, because it's one thing when we say when you invest or gamble. Say gambling is a good entertainment. Go to Vegas if you want to have some fun. but gamble money you can afford to lose. Don't put your money into the market that you can't afford to lose, that will take food off your table. And he's saying this is a great, quick way to make money. It's very satisfying, and he's taking money off of people's tables. And we see how many millions of people it hurts when the market takes a downturn or something like this doesn't pan out the way that all the stars were in alignment. The economic report was good, and their P&L was awesome. And then I lost 20%. What's going on? And this is what's going on.
Mm-hmm.
So by the way, no one else in the world would ever admit that, but I could care.
That's right.
Yeah, no one will admit this, and I don't care.
Oh,
because again, he didn't expect this video to come out to be public consumption, and here he says it.
And you can say that here.
I'm not going to say it on TV.
that's the best. I'm not going to say it on TV. I think. Oh, look at he laughs. The host laughs, but then he's kind of like.
Yeah, it's like, hi.
It's probably going to be on TV.
Let's cut to a commercial, Bob.
Yeah, where do you think you're at?
Jim, what are you doing?
Yeah.
I'm trying to help you here.
Yeah.
I'm trying to dig you out of this hole. You keep digging yourself deeper. Foot and mouth disease.
Oh, man.
And he's not going to admit it on TV. And this guy still is the one in charge of telling everyone what to do, even to this day.
Oh, yeah. And probably like you said, he's like a household name. So everybody knows him. And a lot of people listen to him. And when he gives his approval of a stock, you can see it. Like it hits the feeds, and everyone's like, Cramer said this is a buy, and this is going to be good. And usually, just his approval will drive the stock price up because people pay attention to him.
I'd never seen that TV show, but there was one. I love the actor. I can't recall his name. An Irish actor. Lie to Me. And he was like a detective or something.
Yeah, I know what you're talking about.
And so there's body language that tells you lie. I wonder if this guy would watch one of these shows, whether it's Cramer or anybody, and they're saying, buy this, this is going to be awesome, this is going to be doing good. I wonder if he could say, that dude's lying, because he knows he needs to sell. Because his customer is the institution. His customer is not all those individual investors. As he said earlier, my business is to make my hedge fund money. Regardless of who's invested in it, whose money it is, I need to make my hedge fund money at the expense of others. And so when he's saying, you should buy this, I expect you to make money, oh, you're lying. I wonder if that's
right.
If you can get one of those body language experts to look at that. I've been seeing that a lot lately with John Wick. Like this body language expert will look at characters in movies, and he looks at the body language of John Wick, body language of so-and-so. And I'd love to see if one of these body language experts could get a hold of some of these folks, just watch them on TV. When they're making a recommendation, tell me if that guy's lying. That'd be interesting.
That would be interesting.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund. Do you think that does that exacerbate the moves, or does it make it tougher?
The hedge funds are positioned long short, okay, not just long with mutual funds.
So when we get involved in investments, usually mutual funds are a huge part of that, because you have to buy your mutual fund. You can only make money, the average consumer can only make money if it goes up. If a consumer involves in an index fund, they only make money when the index goes up. So we got to hope the economy and the S&P and the NASDAQ or whatever they're invested in continues to climb. The hedge fund makes money both ways and sideways, every day through Sunday, at least from Sunday afternoon when the market's open.
Right.
And so they can make money both ways versus their customers can only make money one way. And that's one of the reasons that they do this, because they know they can make money on the winning side and on the losing side, and they're playing both sides of the table.
Right. Yeah. Absolutely.
It'd be like having the casino also playing, and so they're shuffling money back and forth because they're both winning. This is house money, but then the newbie comes in, or the rube comes in, and they take his money. So that's the rigged casino type of thing. Or what is that when you have that the shell game, and then you have like all the people around them, they're actually in on the deal, and so when the rube comes up and he loses his money and he looks around, all those guys are gone because they were all in on it, not just the guy doing the shells.
Yeah.
And that's what's going on. They're all in on this game.
So it's really vital these next 6 days, because of your payday. You've really got to control the market. You can't let it live.
So payday's coming, Friday's coming. We can't let this happen. We've got to take control of the market. So that's what they're seeing. They're seeing their paydays coming, and man, if it stays like this, we're not going to make money this week, this quarter. So we can't let, as he says right here, we can't let it lift. We're short. My position is short. We can't let the market lift. So here they go. They're going to prevent good companies who should be seeing an increase. They're going to prevent them from increasing. And how do they do it?
When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today.
Now, RIM back in the day, we might not know it because they're gone. They're bankrupt. But they were the Apple. They were the Microsoft. They were the Amazon of their day. And it's like, we can't afford to let this company go up because we're short on it. And so what are they going to do? It's the, as he says, it's the fulcrum of the market. Like Apple, it's the fulcrum of the NASDAQ. I mean, Apple controls what happens to Apple happens to the NASDAQ. And so that's what they can't afford to let RIM, one of the biggest companies in the market, go up. So what are they going to do?
It's the fulcrum of the market today. So I mean, let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down.
So he's talking about the emotional aspect of it. So we're creating fear, uncertainty, and doubt, and there's going to be spreading the word. We can't say it's bad, but we can create an impression.
Yeah, we can. What do you say? Call a couple people, or that's what he said with RIM, and say like, I can't do it myself, but I can get other people to do it for me.
Right.
That's legal.
Yep.
I'm like once removed.
Yeah. And it's like that joke saying, well, I'm not saying I'm Batman, but you've never seen me and Batman in the same room.
right.
And when something bad happens and I leave, whoever gets stuck with the last musical chair is the one that's going to be sitting on the floor.
Mm-hmm.
But you do it anyway because the SEC doesn't understand it.
So he knows it's illegal.
Yep.
And what does he say there?
But you do it anyway because the SEC doesn't understand it.
So the regulatory agency in charge of them, he says, they don't know what we're doing. I mean, they're our boss, they're our regulatory agency, but they don't know what we're doing, and so that's where they get away with it. It's like when we're kids, like, well, yeah, mom said I shouldn't do this, but I'm going to do it anyway because she's on vacation, she's at work,
and maybe they understand it. We're not saying they're stupid, but it's just so hard to prove. Yeah. I think that's the other thing. It's like, how do you know? How do you know I did that?
There's so many moving parts in the market, and that's one of the things. If you watch the movie The Big Short, how they packaged things in packages, and then they repackaged those packages. So like a $5 million investment, it's like it geometrically kept growing, and you have like $1 billion investment off of a $5 million investment. And so who knows how all this stuff works? And somebody does, but in this case, he's saying the SEC doesn't know, so we get to do it. So we get to do it.
So that's the only sense that I would say this is illegal. But
so he's admitting right there what they're doing is illegal market manipulation.
That's great.
Because if the SEC knew what it was, they'd say, stop it.
Yeah, this is when that body language really starts to pick up.
Yeah. That's the only way I'd say this is illegal. What is the only way? And it's illegal? Yeah, and we're doing it, and who cares?
Man.
Because I can.
But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal.
What I'm doing, that's just blatantly illegal.
It's blatantly illegal.
Yeah, and then they're doing it. Yeah. But he said, this is what's happened. It's at the stake of my hedge fund. I really can't afford to have this happen, so I'm going to do everything I could to make sure my hedge fund stays solvent, stays positive. Because if you have, a couple months in a row where your hedge fund doesn't make money, all your investors are going to pull their money out and go find somebody else.
Another hedge fund.
Yeah, find another hedge fund. And that's the whole point of investing. Go with your top performers. And if this hedge fund's not performing, I'm taking my money elsewhere. It's like, I can't afford to do that. I've got to do something to keep these customers and keep their money.
Illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys.
So, you don't want to foment.
But it's important to foment.
It's important to foment.
You're just going to do it for me. I'm going to call you up and you do it for me, and then I'm once removed. I just tell you exactly what to say.
Yeah.
That's legal. Well, he said it's blatantly illegal.
So I call you to slash my neighbor's tires after I had this argument. So I was in my house. You saw I was there on the TV. I didn't slash your tires.
That's right.
But
that's right.
I got the job done.
That's right.
And that's what they're doing. Doing that fomenting. And again, the bad thing is it's just so emotional, and that's the whole point. Is they're playing with people's emotions to make them to make illogical decisions, but also they're manipulating it. So there's no logic to it, because logically, if you have good earnings, the stock should go up.
That's absolutely right. I feel like the stock market to a lot of people is a mystery, and so when they decide to dabble in it, and then something like this happens, they say, I read this article and I did this, and it looks like that's a good stock, and I'm invested in it, and I thought it was going to go up, and all of a sudden it's down 20%, and I don't understand it. Maybe these hedge funds, maybe smart money knows something I don't know. Maybe I should sell. And then they do it because they don't fully understand it.
And if you set up a stop, it's like, how come the market knows exactly where my stop is?
Yeah.
I invested to buy it at this price. It came in, hit my stop, and with 2 ticks, and then it took us, why? Like they could see my stop. Yes, they can.
Oh.
And yes, they do.
Oh, man.
Yeah, they
I
know.
didn't know that.
Oh, yeah.
Yeah, I don't put stops in, though. So
So they don't know what your threshold is.
They don't know.
They just know how much.
It's only in here.
Bring on the pain. Bring on the pain.
Yeah, I'm willing to go way low here. Way low.
Yeah. Well, even they have their limits. So when you do proper risk management, you lose some, but hopefully you make a lot more.
That's right.
You can't win them all, but you want to win enough as a trader to follow the money and see what these guys are doing based on the charts. So that it could be illogical what's happening in the news. The news could not correlate at all with what's going on in the charts. That's why the charts are so important, and why we have to trade by the charts. And he's going to get into that about the technical versus the fundamental. So it's really important to foment
an impression that research in motion isn't any good, because research in motion is the key today. So, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million. Annie, to knock RIM down.
So he's going to use a little bit of money to just knock it down, to foment, to create that fear. So he's manipulating the price. He's basically using emotion. And like I said, why did I get stopped out? They used 15 to 20 million bucks to take a bunch of people out and start the ball rolling, or start the tower, the little Jenga tower.
That's right. Yeah, like I always equate it to an avalanche, and you're on the top of the mountain, and you started the avalanche. Well, everything below you got trampled on, but you started it. It took some effort on your part, but then it just started free falling, and that's what he's doing. 15, 20 million effort, let it go.
It's like have like a mafia boss. Hey Vinny, you go out and break that guy's window. Hey Jimmy, you go out and slash that guy's. Hey, you bust his kneecaps, and he's fomenting. Oh, we better start listening to this family because more bad stuff's going to happen. And it's like, well, we better listen to these experts. Cramer, tell me what's going to happen. Joey, what's going to happen. And they're the ones that are literally in charge. Yeah. So that's knocking down RIM. It cost me 15, 20 million bucks to knock RIM down, but man, it's going to make me 500-600 million.
To knock RIM down, but it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion.
So, what did he call them?
Moron longs.
Moron longs.
It hurts.
So one of the titans of the industry, the inventor of the BlackBerry, the inventor of the smartphone, powerhouse of the economy, fulcrum of the market. We're going to knock these guys down, and everyone who's long, because man, RIM's a good company. Aren't you buying RIM because you wanted to make money on RIM, right? We buy Bitcoin because we want to make money on Bitcoin. We're going to knock all those morons out of the park.
The buy and holds, the buy long. It's a good company. I just trust the company. I believe in it. I'm just going to buy it and hold it. But he beleaguers some of them. What he's saying. So it's funny. We should bring this up. Are the moron longs, like we talked about, morons because they're longs, or are they morons because they ended up being beleaguered and selling when they knew they shouldn't, but they're like, I just got to get out of this.
Yeah.
So what makes them the moron? Just being long, or selling and falling into their trap? And I think that's interesting.
Yeah, because you could say these morons don't know what I got. Because I'm the one in charge. They're a bunch of morons. They don't know how the market's really going to work. They're long. I'm going to do this. So yeah, it's an interesting way to interpret that. Which way, what type of moron? So what type of moron are you?
Yeah.
If you were a moron, what kind of moron would you be?
Yeah. Neither of them are good.
So they're keying in. They're long on RIM because all the paperwork looks good. RIM's a good, solid company, but we are going to knock it down to save our hedge fund. We're going to keep our customers happy.
Keying on research in motion. So
we're seeing today.
We're seeing that. That's again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM.
So he's going to create that emotion. Then he's going to start getting the talking heads in the news. Because I guess at this time Cramer was not a big news guy. He was the hedge fund manager. So there were other people in the news with their versions of Mad Money and whatever those shows are. So Pisani, let's get Pisani talking about this. Let's get I don't know who, Ted Koppel, whoever talking about this. And he says, getting ready to hear, call the Journal, start getting the talking heads to tell the masses, ooh, something's going on. Hey, RIM's a great company. Oh, well, maybe not. And that's what this whole thing about fomenting is going on.
Then you call the Journal and you get the bozo reporter.
Call that bozo reporter. This guy is just he's gonna do our dirty work for us. Mm-hmm. He's gonna report what we're gonna tell him. And that's what they get to do. They have the power to influence the market because they're the ones that are generating that. Just like today.
It's why when you read an article, you really have to it's a grain of salt every time I read an article. I just want to, okay, cool. That's a good opinion, but it's an opinion, and they can try to pump it full of facts, but you don't know who's really writing the articles that you're reading. You got to take it with a grain of salt for sure.
Yeah. And he just immediately, who does he think these people are? They're just bozos. There's just that bozo reporter on RIM. We're going to tell him to say what we want him to say and drive this behavior.
A sentiment in a certain direction.
Yeah.
Research in motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
If you're not willing to do illegal things, if you're not willing to stir up and foment, maybe you shouldn't play this game.
Yeah, that's absolutely what he says. I really, I'm surprised this video isn't viral or never had a viral time because it's pretty outrageous some of the things he's saying. So,
yeah, I think it's the majority of the thing is, as I like to teach, the market has almost been like the Wizard of Oz. Don't look behind the green curtain. And when you pull the curtain back, you're like, I could do that, And it's like when you really see how markets work, it's no different than like investing in a bucket of lemonade powder. You're a kid, you open up a stand, and the bucket of powder costs $5, and you sell it for $1 a glass. And after your fifth glass, everything's pure profit. It's just economics. It's mathematics.
Right.
And they've made it since the 70s. When the whole retirement industry was created, we have the experts behind this green curtain. We have all the information, the numbers behind the green curtain. We know what's going on behind the green. You just give us your money and trust us. Mm-hmm. And they're the ones taking our money, charging us fees. And then at the end of the day, we're like, is this all I have to retire on? And we trusted these guys. Mm-hmm. And here we have just regular investors, whether it's retirement or just to try to enjoy a few of the better things in life. They're playing with our money.
We're not qualified to invest our own money, is what they tell us. They've been telling us that for years. Let us do it for you. I can guarantee you 8 to 10%. And you should be happy with that. That's phenomenal. That's a phenomenal return. You're not doing anything for it. We're doing all the work. We're giving you 8 to 10%. They're making 500% off of our money.
Mm-hmm. Yeah, we're happy making 8 to 12% per year, and they're doing that every week, if not every day.
Mm-hmm. Yeah. Oh yeah.
So when we learn to do what they do as traders, we get what they got. And that's one of the big things. Yeah. If we can show that we can get these kind of returns year after year, these guys they're not suffering. When I moved to North Carolina, I used to joke. I'm from New York. I used to joke that the Charlotte skyline was a vertical line. It's just one big building with that silly crown on top of it that they light up, right? The Queen Charlotte. I guess it was Bank of America. Is that the building there?
I think it is.
I think it is. And then now after 20 years, it's a horizontal line. Now we actually have a skyline.
Yeah.
And who built all those buildings? All these bankers, all these big financial institutions, all these big brokerage firms. And not a single year has gone by where I've not seen cranes building something new.
Oh, yeah.
But what have we seen? Our accounts go down, our accounts go up, our accounts go down, our accounts go up. These guys up.
Yeah, where's all this money coming from?
Where's it coming from?
I'm not seeing any of it.
What are they doing with our money that's making them all this money, but we're seeing our accounts just languishing and not keeping up even with inflation?
Absolutely.
Especially today. We had a great conversation about inflation with what's going on today. And man, that's why we got to learn how to trade and not
it's
invest.
Scary. We're already behind the 8 ball. If you're making 3 to 4% a year, you're just very safely losing money.
Yeah.
Yeah.
Yeah, and it's only snowballing. Inflation, just in this last year alone, just in the last 3 months, the first 100 days of Biden's presidency, we've printed $1.9 trillion, and then we've printed another however many, $1.2 trillion. And we basically took that jar of lemonade that was half full and just poured more water in it. Well, now we have crappy lemonade.
It's a good analogy.
And that's what's happened to our dollar. We've printed more money, what was it, in the last 33 months then it's like we've printed a third of our money supply in the last 3 months. I forget the exact number. I'll find the reference. I'll throw it in the notes. But that's what we've done. We now have a crappy thing of lemonade, and that's what happened to our money. So you thought you had like a nice nest egg of $2 million. Well, knock 60%, knock $60,000 off of that. $600,000 off of that, and so man, I can't retire as long as I want at the lifestyle that I want. I'm gonna have to go back to work.
Yep.
We'll expire before we retire if the money keeps on doing what the money's gonna do.
Yeah. Absolutely.
And that's the why we have to learn the skill that these guys are doing, but not illegally. We need to learn to really put our money to work and not get these meager returns.
Yeah, absolutely.
In Japan, I don't know if they still have it, but I remember growing up, like no one lost a job in Japan. It was like a thing of honor. And so if they couldn't afford to keep you on your job, they just put you in an office. And there was a word for it in Japanese, which basically meant window watcher. And so you have no job. You sit in your office and you just watch outside that window. But they weren't going to fire you because it's an act of shame that they wouldn't fire you. So they just put you in an office and call you a window watcher. And that's what's going to happen. We're going to be watching outside of our home windows if we even have a home, or outside of a nursing home. And heaven help us if we can't afford assisted living or long-term care, depending on how it is our health is in those later years of our life. So this is what we're relying on, what we've been relying on, and so we need to take a little more control of our lives. As you say, look, if you're not willing to play this way, maybe you shouldn't be in the game, because this is how business gets done, right? And it's in the business that not looking at our benefit, so our retirement and our fulfillment, it's for their hedge funds.
Yep.
Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
So immediately he interrupted the host. And says, "Oh, Apple! I can't wait to tell you about it. We can't wait to let Apple and knock them down."
He does. I don't know if the host was trying to get him out of it. Like, hey, let's stop talking about RIM. Let's talk about Apple. People are focused on Apple, and he just interrupts him and takes control of the conversation. And he says that Apple's easy. All we have to do is say AT&T and Verizon don't like the phone and spread that rumor, and that'll just create fear, create a false sentiment, and drive the price down, or whatever. Do vice versa. Oh, this is the next best thing, best phone in the world. Yada yada yada. Drive the price up, wherever he wants to do. And it's just he has the money and the means and the connections to do it, which we don't have. We don't have that advantage. We don't have that at all. It's kind of scary.
Yeah. So he's talking about, here's a great company. We can't afford to let them do well. And so it's very important to spread the rumor that here's these two companies that they don't like the iPhone. So he's just saying right out, we're going to spread a rumor.
The top two cell phone companies.
To the top, about
Verizon and AT&T. Top two cell phone companies in America, probably the world, whatever. That's what we needed.
At the time, because they would, if Apple's going to do what Apple does, they're going to go big, so they have to go with a big carrier.
That's a very easy one to do, because it's also, you want to spread the rumor that it's not going to be ready for Macworld.
So first of all, you're going to build a phone that no one's going to want to give service to, and it's not even going to be on time.
He said, the host says Apple, and this is the first thing he thinks of. Is ways to manipulate them. Like, it was just like, people talk about Apple a lot today. Let me tell you about Apple. This is what I would do. Wow.
Yeah.
Wow.
Yeah. So that's what I was surprised. He didn't even give the host a chance to finish his sentence, because he might have been asking, how do you like their product? Do you have an Apple MacBook? Do you use Apple products? What do you think of?
It could have been anything.
Yeah.
Oh, let me tell you how to manipulate them.
What's your favorite app on the phone? And it's like, no. But yeah, we're going to knock it down, because it's all about creating these, as he's going to say, these fictions.
Yeah.
And this is very easy, because the people who write about Apple want that story, and you can claim that it's credible because you spoke to someone at Apple, because Apple doesn't.
Right, they're not going to comment.
So you can claim that these rumors are credible because no one's going to verify them.
Exactly.
And Apple's not even going to comment on them.
A refusal to comment isn't a yes or a no, but it could be a yes or a no. So they're saying, well, this isn't false because they didn't say it was, but they didn't say it was true either. So, oh man! And
they're actually playing, I think, at one of Apple's strengths and one of Apple's weaknesses. Because I'm the Apple fanboy, and I used to buy every single thing. I have the bleeding edge, And they would hold it a secret because, I mean, how wow was it when they released the iPhone? How wow was it when the MacBook Air came out of a manila envelope? How wow was it, when we see just technology after technology they release? And they're not going to comment because it's part of their motif. It's part of their mystique. Point. It's their identity. They give big wow things, and so, but they're taking advantage of that. Saying, well, they're not going to comment. Let's create all these rumors. They're not going to say anything anyway. They're not going to say you're lying. Well, tell us the truth. Oh, we can't tell you the truth because that's not what we do. We like to surprise people.
Yep, that's very true. That's a good point. I didn't think about that.
So when was the last time you beat your wife?
What? Exactly.
It's a no-win situation. So how long have you been, do you still beat your wife? What do you mean still beat my wife? So tell me, Apple. Yeah.
No, I don't. Wait. I've never beat my wife.
And that's what they're playing on. And of course the people are just salivating for this stuff, and they're they're salivating for the fear. Oh, what do you mean? Maybe I do have shares in Apple. What do you think's gonna happen? Maybe I need to sell all my Apple.
I'm up 10% right now. I can stop. It can be done. Or I'm only down 5%. I can just cut it now. I'm good.
Yeah,
that's what happens.
Playing with emotions, manipulating not just the market, but manipulating human behavior.
Right, so it's really an ideal short, and I would, again, if I were a short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
Yeah, it's very effective. Just keep all these rumors.
Yeah, lying is a very effective way.
Yeah. It's like wanting to, if you had a sibling or something that you hated or coworker, just start spreading rumors. Oh, I hear he beats his wife. Oh, I hear he's into this. Oh, I hear he is always looking at made snide comments at our secretary. All those things, and you're spreading rumors, and then it's the damage is done. And no one's going to verify it. Especially in the Me Too world today, no one's going to verify an accusation like that, and here no one's going to verify an Apple rumor. And that's what he's taking advantage of.
I might also, by the way, because the stock at 84, 85, a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with, use a firm that doesn't know what the heck it's doing.
Yeah. So we're going to do this thing, but we're going to find somebody that doesn't know what's going on. And so it's like if you knew, like, oh, you want to buy 1,000 puts? It's like, you know what that's going to do to the market? People are going to wonder, man, what's going on with Apple? If you're buying 1,000 puts, you think Apple's going to go down? Maybe I should buy 1,000 puts. Maybe I should buy 1,000 puts. Maybe
right.
They're creating that emotion using just
sentiment.
A little bit of capital to buy 1,000 puts. Who's buying 1,000 puts again? Who's going to beat against the housing market? And that was the whole point of the Big Short. Is no one's going to beat against the housing market.
Yep.
Housing market's rock solid.
Yeah.
No one's going to go beat against Fannie Mae and Freddie Mac.
Yep.
Where are they now? Yeah.
That's a good point. That's exactly what he's doing.
Yep. So who do we go to? It's like that dumb what do you call him? The bozo at the Journal.
Yep.
Oh, who are we going to do? We'll get UBS to do this for us.
Maybe go to UBS for puts, and you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS did.
Yep. There you go. So
I get reports on that all the time.
Yeah.
The options stuff and say, well, this is a very bearish sentiment. What does this mean? There's an over amount of puts on January, and it's like, well, what does it mean? Is it manipulation? Is it actually something going to happen? We don't get to know, really. We just have to trust our fundamentals and what we can see and what we can do with.
Yeah, it's one thing for an executive or an executive team at a company who knows they're going to have a bad quarter. They all go out and buy it and have, say, 50,000 puts among them. But then it's like, why is 50,000 puts? Now all the employees start doing it, and then the news people start spreading it, and now everyone starts doing it, and then all of a sudden, no, we were having a great quarter. We sold these puts because of whatever, and it wasn't even for that reason. And here they are again, just creating rumors. Start with the news desk at the Journal. Get Pisani to say it on television, and then start shooting those puts out. And let the brokerages say, who put in this big order? What's going on, with this thing? And it creates that whole chain reaction, that avalanche, as you were saying.
Right.
UBS. Then they call Pisani again. You have to use those guys and say, listen, I see a big buyer puts and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
So this is what's going on under the market you don't see. And this is what the average investor can't see. What's going on? They're manipulating these prices. They're creating all this sentiment and has nothing to do with what we think. Oh, let's look at the price to earnings ratio. Oh, look at those dividends. Oh, let's look at the health of the economy. Oh, if they're in the hotel business or the cruise line business, how well were they doing last year? Nothing. COVID.
Right.
And so, well, what about those other companies? Uber Eats or DoorDash? They were rocking.
Rocking.
You know, I've heard 9 billionaires were created during COVID because of the way the economy changed, and certainly Jeff Bezos took it all the way to the bank.
Oh yeah,
yeah. I don't know if it was Amazon, how much percentage was, but Amazon didn't hurt.
not at all. And some of the other postal companies that actually I was invested in, they had a complete turnaround, and I was like, nice, let's go. Yeah. So that was good.
Nothing like a little global scare to get a couple certain industries like masks. I should have invested in surgical masks, man.
3M or whatever it is.
3M.
If I was invested in them pre-pandemic, oof,
yeah,
that'd have been awesome.
Yeah, things we would know, but we wouldn't have heard any of that from Kramer.
No,
no masks. Yeah, no one's going to buy masks, and then he goes and buys all these masks.
Yeah,
I'm going to go along on masks.
Yeah.
So this is what's going on in the market. He says this is the mechanics of the market. It's not about what the investors do, what comes out in the rows. This is the mechanics of the market that you don't see, and that's what he's telling the host right there. And the host is like, "What?
You don't see."
Right. Nobody else talks about it.
Right. But what's important when you're in that hedge fund mode is to not do anything remotely truthful.
He interrupted me again, by the way. He was like, but I'm talking. This poor host, he only got to say a few words.
Yeah. Says Apple, and then Kramer talks for 30 minutes. He talks rim, then Kramer talks for 30 minutes.
Yeah.
And now here, this is, I think, the key. You don't have to talk about rim being the fulcrum of the market. This is the fulcrum of the video. Mm-hmm. When you're in a hedge fund, when you're in hedge fund mode, your job is to not do anything remotely truthful.
Yep.
And these are the people that control our money, and we entrust them. And that's the amazing thing, not to do anything remotely truthful.
Mm-hmm. Absolutely. That's makes me sick.
Yeah. So it makes you want you to sell everything and go into the forest.
Yeah, absolutely. Invest in yourself and be like, I'll just have start my own business and not be tied to the market at all, because there's, like you said, it maybe it's not illegal in some ways, but it's not moral.
Yeah, and it definitely is illegal. But just like today, you see politicians, you see business people, you see these financial firms. They're doing all these things with no repercussion.
Yeah, or minimal.
Not a single person is going to jail. Not a single person is feeling the pain. Mm-hmm. There was that newscaster or reporter at CNN that got caught doing something rather morally disgusting on a Zoom call, and he got fired. And I just heard this morning that he's back working at CNN. So there's no repercussions on any of these things.
To save face and then hiring back when no one's looking.
Yeah. And so, man, what an awkward interview he had when he came back to work. But it was like, oh, really? So, and that's the thing. This is like we saw, or I kind of read off a bunch of these news headlines when we started here, year after year. That's just standard operating procedure. As he says, standard operating procedure, when you're in hedge fund mode, our job is not to do a single thing remotely truthful. Our job is to lie, to foment, to create an impression so that we can get what we want to get at the expense of others.
Because the truth is so against your view that it's important to create a new truth to develop a fiction.
That's my favorite line.
That's your favorite line?
That's my favorite line. A new truth to develop a fiction. If you really think about it, that's not the first time Kramer said that. Like, you don't just come up with that. You know what I mean? And he's definitely thought about this. He's done this a few times. I love the body language. When he said remotely truthful, the host goes, like, just like stiffened up, like, did he just say that?
Yeah, and this is before the internet. This is before you can just go to YouTube real quick and watch a video or Facebook. This is 2006, maybe right at the beginning of 2007.
So yeah, before the viral videos and everything's booming and stuff like that. And
so literally, Cramer just thought that some studio audience is going to see this and then it's never going to see the light of day. Media was not what it is today.
I'm surprised it hasn't been buried.
Yeah, they probably tried to at some point.
Yeah, I'm very surprised.
I wonder when the first public post was. Because for copyright reasons, I've seen this thing taken down. If all they do is post the raw video, taking it down. So this is fair use, what we're doing here. We're commenting on the video here. But when people just post it. But yeah, this video has been floating around for a while, at least 8 years, because I've probably seen this 8 years ago when I started learning how to trade. So that would have been 2013. So you're talking 5 years, yeah. And what a way the world has changed.
Yeah.
There was no Facebook. That there was no iPhone. They were talking about they're going to release the iPhone. So this video was before.
They don't like the phone.
Before the iPhone.
The iPhone. Yeah, it is. It's so in a little ways it's stated in some of the money he talks about. You would have to inflate that. It's going to cost me 10, 15, 20 million dollars to foment to knock that stock down. Now it might be 50, 60, 70, 100 million dollars to knock a stock down. But the hedge fund still got that money. They got that capital.
Yeah.
Stocks are more expensive now, and to some extent, but hedge funds are even bigger. So even though this video is a little dated, the mechanics behind it, the market hasn't changed. It's just on a more massive scale as far as the money comes.
Yeah, exactly. Yeah, and the same thing. They've got more money because now there's more investors in it. Back then, it was pulling teeth. Not so much pulling teeth, but only the wealthy really invested. Your blue collar folks kept the money under the mattress. And that's where when grandma would die, you go and you see, oh, here's a cookie jar, full of money. Oh, literally you go in their pillowcases. That's where grandma kept all her money. But we're now, especially in this digital age, we don't even have money. They're trying to get rid of money. Oh, we have a coin shortage. What do you mean we have a coin shortage? I go to get my Big Mac and I can't pay in cash because they can't give me 37 cents in change.
Yeah, that never made sense.
What in the world, And they're trying to get rid of the physical currency, in one way, if you want to get on a conspiratorial thing, because that's what they do. If they can control it all digitally, what they're doing right now in this video, it just becomes that much more easier. They're not actually taking gold bars. They're not taking piles of dollar bills from one place to the other. It's all digital. They call it that. And it's even worse than fiat currency. It's already cryptocurrency. We don't have to look at Bitcoin. The dollar is almost a cryptocurrency because we're doing everything by swiping some plastic or having a direct deposit.
The numbers on the screen.
No real money.
We never really exchange money.
I remember one of the first big checks I got as a consultant when I started consulting in my IT career back in 93. No, it would have been 97. I got like a biggest paycheck I ever got. I wanted it in cash. I wanted to hold that much cash in my hand. So I went to the bank. I couldn't go to my bank. I had to go to another bank because it was cash. The check was made out to that bank, and I took home like $16,000 in cash.
Oh,
I wanted it in hundreds,
wow.
And I just laid it out all on the bed. I was feeling it.
Look at you. Yeah, that's funny.
It was crazy. But then but we don't do that anymore. Drug dealers do it, but we don't.
Yeah, they do.
When they invaded Iraq and they found all these stockpiles of American bills on pallets and pallets of American cash, what happens when we truly go digital? Is that American cash going to be like the old Civil War money that was found? And so the Northerners come down and here's a $10,000, $20,000 in Confederate money, but it's worthless. And
I guess it'll be like a massive turn in your cash to your bank.
Yeah.
And in turn, it turns into the crypto, the digital currency, or else it's worthless. If you don't turn it in by a certain time, it's worthless.
Yeah.
You could easily do it. All you got to do is tell us to do it.
That's right. Yeah, it's a Federal Reserve note, says right there, and the feds say what it's worth, and if they decide at date X, if you didn't hand it in, it's worthless. And not worth less, but worthless.
Yeah.
You better hand it over, bucko.
Yeah.
Crazy. So, all right, so get back on track.
Yeah.
There's a little bit of a rabbit trail there. It's very important to create a fiction based on a small truth.
And the fiction is developed by almost anybody who's down like 2% to up 6% here. you can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
Yeah, so we're desperate. I got to make my people money, got to keep my hedge fund solvent, and we'll do these illegal things, these illicit things, these immoral things, because it's what I got to do to keep my hedge fund solvent.
So you're talking about the mechanics of the market.
Well, the mechanics are much more important than the fundamentals.
Yeah. So what? I'll let you comment on that
That
one.
body language. He's getting ready to talk about the mechanics and the fundamentals, and he's like, "What would the fundamentals?" Oh, no. Don't even worry about the fundamentals. The mechanics of the market are much more important than the fundamentals. Exactly what he says, and he just goes, like his mind has been blown. He's like, "I can't believe this is coming out of your mouth." Bearing in mind, what's funny is this whole conversation started with, so the futures are up, and once the stock market actually opens, it goes back down. Why is that? That's all he really asked.
The misdirection in the futures
misdirection
market.
in the futures. All this came out of that. So I don't think he was ready for any of this conversation at all. But he got gold. He got gold from Cramer. He just didn't know it.
And I wonder if the host might have got some flack for, why'd you ask him those questions? It spilled all the beans, and we don't want people to see this information. I was like, I just asked an innocent question.
I didn't ask anything.
Cramer just started talking out of the. I mean, was Cramer drinking something at that point?
It might have been. I wonder if this is like he had a Bloody Mary and then he had a little bourbon drink and now he's feeling pretty good. It seemed like he was.
Yeah.
I don't know.
He obviously felt comfortable because, like you said, I'm not going to ever say this on TV. This isn't something I'd ever say on television, but this is what we do. And if you're not willing to do it, maybe you shouldn't play the game.
And at this point, he wasn't managing a hedge fund. I don't think. I think it's what he said, when I used to.
When I used to.
Yeah. So I think instead of, and it's funny though, he talks about these legal things, and instead of comfortable, I think he felt untouchable. And I think when he's managing a hedge fund, they don't care. They feel untouchable. Mm-hmm. They have all the money in the world. They can do what they want to do. They can manipulate it, do whatever. Mm. Untouchable, I think, is how he feels. Kind of prideful.
Good point. Almost like that Denzel Washington movie, American Gangster, and he was able to just shoot someone in broad daylight right there in the street. I'm untouchable. You can't do that. And here he is, just shooting money. Shooting his techniques right out in the middle of the markets and feeling untouchable. Yeah, good point. Yeah, what was his motivation? It's just because he's so relaxed. He's excited. He's giddy. He's like, this is a fun game. It's a lot of fun.
Yeah,
doing this. That's what he said. It's a fun game. So what we're doing, way more important than the fundamentals. So here we are trying to make good investment decisions, good retirement decisions, and you're told to look at the fundamentals. Is this a good, strong company? Is this a blue chip company? It has nothing to do with the fundamentals. This is what we do. We control the market.
Okay, well, but in terms of the fundamentals, you've been writing about how you
Who cares about the fundamentals? Research in motion just blew out the court.
Right.
But look what people can do.
Research in motion blew out the quarter. That did an awesome quarter. Look what we can do.
But look what people can do. Look what people can do. So I'm assuming, we were talking about it earlier. He just says they blew out the quarter, but look what people can do. So clearly, they have driven it down. So I would like to see that on a chart. When this video is taken the day of, that would be awesome to see how far down they actually drove it. Mm. Clearly, they drove it down a considerable amount, even with a phenomenal earnings report. So.
Yeah. Well, maybe I'll be able to put that on the video, so we get to show that, superimpose it right now. So here's the date of this. Interview, and so Well, I'll just have to go to right before Macworld, right before the iPhone launch. So just look at the daily chart.
Yeah.
Before this, because that's what you said. We have to drive this iPhone down.
Yeah.
So whenever Macworld was, that's where we can find that research in motion chart. So cut to the tape.
Yeah.
Cut to the chart.
I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right. Yeah. The market. It's nothing. What stocks do? It has nothing to do with the actual stocks. So what we do.
Yeah.
Look at what a couple people could do. It has nothing to do with the actual stocks. Another pivot point here. Another fulcrum moment. It's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks. And that's my philosophy in the futures world. So I trade futures and Forex primarily. And I don't care what it is. I look at the chart. The chart tells me what these guys are doing. And I just follow the money. And so it's like the last thing I look at is what is it actually? Because it's like I need to go to the grocery store, All right, so I need to go to the grocery store. Then I need to decide, oh, am I taking my car, or my wife's car? Am I calling an Uber? And so I see this chart. This is where I want to get in. This is where I want to get out. Oh, it's a futures contract. So this is what it's a forex pair. This is what I need to do. Oh, it's an ETF. It's like so the charts are the really important thing. Looking at what they're doing, because they're in control of the market. And so it's not about the fundamentals. So the charts are what tell us, supply and demand traders, how to see what they're doing and do what they do and follow in their footsteps, because you can't fight them. You're not going to fight these billion-dollar hedge funds. And as I said right there, it has nothing to do with the actual stocks. So what we're taught to invest in, good solid companies, he's saying it has nothing to do with the stock. It has to do with what we're doing up in that ivory tower.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
Yeah.
So they'll come to their senses and say, what did we do wrong? Or, no, wait, you did this to us.
Yeah.
And say, well, Fannie Mae lied for $6 billion.
That's exactly what it's that fear. It's everything that that we were talking about earlier, and just saying, well, I sold because it was going down, and that article came out, and then it went down even more. So I figured the article was right. Turns out everybody's just a liar. I don't know what to do. So that's
Liars and the lies they lie about. Yeah.
there's it's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game.
That's a pretty good game. He's so happy. He's so happy about it.
Look what people can do.
Yeah.
He's like, look what I have done. I have the power.
Yeah. I told him this earlier. I thought that it was dubbed over. I thought somebody did a Cramer impersonation, but no. Like you zoom in on his mouth and in his mannerisms, like because everything he's saying is so outrageous. It's like surely he didn't say that. And I know he's explaining how it works and how they do it illegally. And he just keeps on laying it on thicker and thicker. And this guy's like stiffening up.
Yeah.
I'm going to get fired.
And it could have been gotten fired for the man that brought Cramer down. But Cramer never got down. Just like you see in politics, people that do things wrong. And it could be whether it's viciously wrong, like a moral wrong, or they were just wrong, like, oh, you were wrong about Corona. You were wrong about this. You were incorrect. And so why do you still have your job? At least as traders, if you're doing proper risk management, you could be wrong 75% of the time and still make money. So you could lose one, win 5. But what kind of job can you keep where if you screw up 3 out of 4 times and still keep your job? And so trading, you can do that. But this guy, what we're seeing here, all these guys, we see they lied. They just like we looked at the market manipulation statistics earlier. Why is these companies still in business if time after time after time they're caught doing this, red-handed doing it, and they do it with impunity now? It's the way the business works. Yeah,
absolutely.
So we just have to work within the system, knowing how to not game the system, but work within the system. Or I'll do this and this so Vinny doesn't throw a rock through my shop window. It's just what I got do what I got to do.
Yeah.
But we got to do it from the financial side, knowing what they do and be careful that it's not about the stocks. It's about the fictions, as he said. It's about the vicious cycle that they're creating, which he thinks is a pretty good game, but it's costing people their fortunes.
And it can be played. You pay for a percent or two.
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be good? Right, and then you go back
You
flip to the
certainly
long
got to
side.
use the other side.
Interesting.
Yeah, and there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Yeah.
So he's gonna. This is perfect. He's so beginning. This video. He's like, well, tell everybody that the phone's not going to be ready in time, and Verizon and AT&T aren't going to like it. They're not going to pick it up. So then I do 1,000 puts, January puts for 80, and then I do all this stuff, and then I turn around. And everything I said was going to happen, I know it's not. Verizon's going to pick up the phone. It's a phenomenal product. It's a great company. And I can go buy a bunch of common at cheap and then play right into when they're going to release that phone. And it's going to be good, And then make more money. I made money on the way down, money on the way up.
Yeah, and that's what he talked about. The hedge funds play long and short. So he played the short, which everyone holding lost money, and he was making money on the short. And then when they finally got out, they said, we're done. We're done hemorrhaging. I've lost enough blood. He goes and buys it from, we'll take that terrible stock off your hands at a wholesale price, and we'll buy that terrible stock from you. And then the news does come out, and it went great.
The Apple phone, iPhone is amazing. Who would have known?
Who'd have thunk it?
Yeah.
Yeah, who'd have thunk it? And here we are. We can't even imagine not having our phones and our digital devices and everything.
Right.
Yeah. And it is the great thing about trading. I mean, we don't have to go to a pit. We don't have to buy a seat. We don't have to wear a green or red jacket. We can just do it from the comfort of our home.
Right.
So it is a beautiful thing, but you got to be careful. And that's just, again, they played them. They played them like a fiddle.
Mm-hmm.
Play you like a fiddle, and that's exactly what happens there.
Okay. Well, maybe the fundamentals don't matter, but
maybe the fundamentals don't matter. This whole point of this conversation is they don't matter.
Maybe the fundamentals don't matter.
Remember, what Wall Street Confidential is not giving you the party line. Oh, here's the party line, by the way. I spoke to Apple on the phone. I hear the phones are good, and Verizon might take it. And as a matter of fact, the research motion sellers, I don't think they know what they're talking about.
But you've been writing about the cell phone market. You think you don't want to be involved in that.
The problem with the cell phone market, frankly, is that these guys are all killing each other. Someone has to take a dive. Motorola and Nokia have to get in a room and just fix price. They've been reluctant to do that because of the various justice departments and because they
it's illegal, right? Yeah.
Well, that hasn't stopped a lot of other companies.
This is true.
That doesn't stop me.
Not going to stop him. The standard operating procedure. And he says, this is true. You're right. This is true.
Yeah.
This is true.
This seems to be a case where they seem to be directly worried about the authorities. It's almost as if they have a lawyer that matters, unlike, say, the Bristol Myers lawyers. And, what eventually happens is the shareholders demand that you get phony lawyers and you sit in the room. And it'll happen soon.
Real quick, the Fed, the numbers out today weaker than expected.
Oh, so what? The Fed has obviously got to cut. But, again, you call the various guys who cover the bonds and you say, ignore the bond action. What's really happened is the Fed is very frightened about, and then you gin up the number that they're really frightened about.
Just ginning up the numbers.
Yeah.
Just here's some numbers. It'll relax there, Fed. Relax. We got it in control. We're the ones in control of this economy. You'll just gin up the numbers that you're worried about.
Yeah.
And get out of my house.
Yeah, that's exactly right. They don't just control, the market. They control people that control the market, like the Fed.
Yeah. I forgot who it was that said it, but it's about like using options instead of stocks. I don't want to own the stock. I want to control the stock. And so that's why we play options. Mm-hmm. Of course, we get all the leverage that goes with it. And it says, I don't want to own anything, but I want to control everything. Mm-hmm. And that's what they're doing. They're in control, and they technically don't own these things. Their customers own them or the hedge fund owns them, but they're the ones in control. They're the puppet master. That's what it was called back in the conspiracy theory days, I guess, is Illuminati, the puppet masters. And they are the puppet masters of the financial markets. They're pulling all those strings. They're creating all those rumors. They're inducing all this foment. And now they're dealing with the Feds or the SEC. And they're dealing with their fears that, maybe this will collapse the market or this. We got it good. We're okay. Ginning up the numbers.
The Fed is actually desperate to try to figure out, how quickly they have to cut without looking like dopes that they raised.
Right, because they've been.
Don't make the government look bad. How do we save face? And we'll help you out. Just help us with a few of these things.
Right, because they've been talking about they're worried about inflation all this last few months.
You don't want to raise in May and then cut in January. You look like Mexico, for heaven's sake. This is like a distinguished group of people who went to really good schools.
Right, these are smart guys.
Yeah, these are the monkeys in charge of our economy, and they went to really good schools, right?
Yeah, they went to really good schools. Who said that? The host.
I want to make them look like a bunch of dopes.
Oh my gosh!
What was that? It was a great line in the Big Short where they're going after Michael Burry, and he's saying we're going to short the housing market, and they're saying, look, you think you're smarter than Bernanke and this guy, and it's like, it's Dr. Burry, and yeah, yes I do.
Yeah,
you think you with bare feet and a t-shirt, sitting up in this office is smarter than Bernanke? I was like, it's Dr. Burry, and yes.
Yeah, that was a good movie.
Yeah, they don't want to look like dopes.
But when we were talking earlier in the week, you said you think it would be some sort of crisis, possibly Ford being a trigger.
Well, Ford went and did all that. They pledged all this investment banking to all these guys. So now that they're very reluctant to say negative things, it makes it much tougher for the Ford story to play out.
Yeah, it's really bad when the facts mess up your fiction.
That's a good point.
I mean, the amount of business that Ford has to do. Ford may be the big client of 2007. So if I were in the corporate finance room, I would say, listen to the research guy. I said, listen, I spoke with Mullally. I actually have the inside. The plan works. So then you're the research guy and you say, oh, man, what do I do? It's bonus time. I'm not going to be a total idiot. The Spitzer's going to Albany. Let's get back in the game.
Right.
I think that's important.
Is it possible? Because a year ago at this time, a lot of people were saying GM's about to go bankrupt, and of course the stock's up 50-some-odd%.
Well, they're GM. No, the
57?
GM. The difference between Ford and GM was the GM's balance sheet was never really. It turns out wasn't that bad. Ford's balance sheet's pathetic, and you know that because they were willing to screw over the common for the bonds.
So again, you had a company that's strong, and they're wanting to make it look bad. A company that's really pretty good, and they want to make it look bad. And a company that's bad want to make it look good, and just playing with it. It's not anything to do with reality.
Right. Yeah, that's a good way to put it. The reality of it is, if I were the host or whatever, well, what about reality? No, don't worry about reality. We don't need to worry about what's really happening.
Yeah, it's like people who think, I'll go and get my liberal arts degree and surfing, whatever, and then it's like, well, you expect to ever buy a house? Expect to
right, yeah.
I think a meme that's going around nowadays is you see these two people on like HGTV where they do like the house makeovers, and you'll see this person. Oh, this person raises carpenter snails, and this woman does macrame, but their budget is $1.4 million. It's like, what? This isn't reality.
Yeah,
and this is they're messing with reality.
Bonds.
Right.
That's kind of if it weren't Ford, if this were Qualcomm, we'd be saying Qualcomm is desperate, But no, it's Ford.
But it's Ford. It's an American icon.
Yeah, I drove a
right.
Ford. I owned a Ford once.
And this is our country. Well,
Yeah,
this
right.
has been Jim Cramer.
Again, what I'm trying to go for.
He's trying to close. Let's just cut this conversation off. We've given away too many beans.
Ford's an icon and is an American icon, and this is our country. Well, this has been Jim Cramer. I mean, just like, I'm done.
I still got something to say though, man. I'm Jim Cramer. Yeah.
For in the Wall Street Confidential, and I'm not saying you're sending me. I have to talk about what it's like at my hedge fund, okay? And what other hedge funds do. Because the difference is that if this is an intraday show, and you need to know what I know is going on. Now, we step back. Research in Motion was a real blowout quarter. It was a really good quarter, and I was quite surprised how strong the margins were. It looks like the other guys have really dropped out. It's a terrific story. Should it be up 6? Yeah, I think so. But, look where we are. It's Friday. You got 5 more days to make your quarter.
Right.
Can you really risk having RIM up this much? I don't think.
Remember, they're short RIM, and RIM's doing great. We can't afford to let RIM stay up there. And it's like, what? Can you really risk having RIM up this much? I really don't think you can. We're going to lose customers. We're going to lose our business. We're going to lose billions of dollars.
I think you can.
Okay, and they're not. And if I'm correct, you're off next week.
Yes, I am.
Okay, and I am as well. So we'll be back in 2000.
Bet your RIM's glad he's not working next week.
Yeah.
Let's get Cramer out of the room for a week so we can get our stock price back up.
Yeah.
I'm hoping that we finish the year at 1260 because that's at 12,460 because that's what I said at the beginning of the year was. Now, yesterday we came in and we were 20 points away from what I predicted. I want to nail it.
Do you have a forecast for 2007?
Yeah, but I'm not. It's over a series of 5 days, so people have to go to realmoney.com.
Check it out on realmoney.com. And Jim, thanks very much for being here.
You.
I'm Aaron Task. Stay tuned for more of TheStreet.com TV.
Crazy stuff.
Absolutely. It's almost unbelievable, to be honest. Yeah, first time I watched it, I was like, surely this isn't real. And then kept watching it. Man, I've watched it a few times now, and it's still just as unbelievable as before. But that's what's really going on.
Yep.
One good thing that he did say is at the very end, he said, I think it's important for you to know, this is what's happening. But he was kind of talking about it in a different aspect. He really wasn't talking to a retail investor. But it's important for retails, people that invest from home, to understand these are the mechanics. And according to them, fundamentals don't matter. Nothing matters but fiction. Truth definitely doesn't matter. And we need to know that's how they play. So if that's how they play, then at least we need to know their rules.
And that's the sad thing for the retail investor is the fundamentals are really all they have to go on.
Mm-hmm.
They're looking for that long-term play, for that solid company. What Warren Buffett said, if you like it, buy it. If you like coffee, look for Starbucks, buy Dunkin' Donuts.
Mm-hmm.
If you like this car, buy that car company. Because if you like it, other people are going to like it, and therefore it's a good company, and it's going to go up. But as we see here, everyone loved that BlackBerry. So that was the phone. That was the corporate standard. They owned that market. They couldn't pivot and didn't pivot, and therefore they lost it. They went bankrupt. The iPhone took it all from them, which we see a lot of businesses do that. Kodak should have owned the digital photography market, and Kodak didn't pivot, and Kodak is nothing now, hardly. So the average investor, this is all they got. They don't want to learn how to trade. They don't think they can learn how to trade. They think that just like their dad did, just like their granddad did, just like his granddad did, we look for something good, and hopefully it'll go up. And that's where we say buy and hold is really like buy and hope. You're hoping it's going to go up and not get hammered by one of these guys. You hope it's going to go up and the economy's not going to tank, or inflation or devaluation of our currency isn't going to happen. We got to stop hoping and take action. We can hope that our house doesn't get burgled into, but unless I put a burglar alarm, unless I do these steps, I'm leaving my house open, open for infiltration. And these are the guys that are infiltrating our retirement accounts.
Yep, absolutely. You said it well. Absolutely.
So, any final comments from you?
I think we hit it pretty hard. I think that's about all we can say.
This took a lot more emotional energy out of me than I thought it would.
Yeah, it was a little longer. We did get off on a rabbit trail, but that's to be expected with us.
But I had a blast. This is the first time I'd ever done something like this.
Me too.
I've seen people
absolutely.
do it. And thank you so much for being willing to do it.
No problem. I'm honored.
If it wasn't for me telling you I was going to do this, and you said you were familiar with the video, I thought, that'd be awesome if we can both someone else that's familiar with the video and also invested in investing. You were looking at this to be, one of the ways that provides for your family, as we all want it to do. We want to secure not only our income, but secure our retirement, our financial future, and a legacy. We just had a baby.
I did.
And so you're thinking long term, longer term than I am,
but not buy and hold. No.
Not buy and hold. You're thinking long term with all the little near term steps. So I had a blast. Thanks for coming here.
Yeah,
and,
absolutely.
You're welcome for lunch again.
Oh yeah.
Thank you again for.
I appreciate it. This was fun. I learned a lot. So just going over it with him. Never been over it with somebody knows a lot more than me. So it was phenomenal for me to sit here and learn and be able to comment. So that was fun. Yeah.
When we get the chance to do this again, and maybe just do like a happy hour too. Maybe we'll get a few of our friends that are
that'd be great.
Novice traders in there. Just sit around a fire or just sit around a table with a couple libations and something like that.
Yes. Yes.
All right. Well, till next time, we'll see you on the charts. Take care.
Bye.
Thanks for watching today's presentation. For more quality content, like, follow, and subscribe. You know the drill. Hungry for more information about the markets? Read our articles on TradingView and at sabertradingsystems.com via the links below. Trade well.